What up, HyperChange? Welcome to another episode. Today we're talking about Shopify, tickers SHOP. This is one of the fastest growing e-commerce companies in the entire public market right now. I got a ton of requests about them, so let's get right into the business. Shopify is basically a software platform that allows entrepreneurs, small businesses, and even large enterprises to sell online. They want to be the backbone of your entire sales infrastructure. So if you can check out this slide from their investor deck, you'll see they want to allow you to have every single channel possible. They started with the online store and allowing you to sell your products on that website. They've since expanded to a ton of different things. They've partnered with eBay, they partnered with Amazon, they're partnering with Facebook, they just partnered with BuzzFeed, they just launched a mobile card reader so that you can take credit cards in person. They're setting up to make it incredibly easy for you to sell products, track all that data back to the single platform, no matter what channel you're selling them on. I think this is a huge product. It takes away so many pain points. As an entrepreneur, I love Shopify. I actually just signed up. HyperChange's new website just launched. Link right here, www.hyperchangetv.com, built on Shopify's platform. This is part of the reason I was waiting to make the episode, because I wanted to use the product as a customer to tell you guys about it. And I love the experience. I built my own website from the ground up, didn't take too long, got the product uploaded, and now I'm ready to start selling. The first product we're launching as our merch on Shopify is this t-shirt. If you want to buy it, buy it. But incredible customer service. I was just on the phone with them for like 10 or 15 minutes, working through all my issues, making sure shipping's correct, helping them format minor tweaks before the website went live. Incredibly helpful. As you can see, this is kind of their pricing strategy. They will scale from anything from the entrepreneur, which is what I and HyperChange use, $29 a month to set up your own website, manage all of your store. Included in that, they sent me my own Shopify POS system so that if people come meet me in New York or my apartment, I can accept credit cards with this nifty little device as well. And that's all included in my plan. Their competitors are companies like Wix, Squarespace, Weebly, WordPress, other kind of do-it-yourself website builders. And on a broader sense, the real competitor is also coders and individual companies that used to build websites for you. That's totally a thing of the past. Maybe 10 or 15 years ago, if I wanted to get online and do a website, I would have to hire somebody who could code the whole thing. It was super complicated, tweak all the code. Shopify, that's so easy. I can manage everything by myself. There's no coding required. I can change something with the click of a button. It's only $29 a month. It's such a powerful platform. It's really disruptive, and I think it's an incredible product because it empowers entrepreneurs to be able to sell things easily, set up a really professionally looking website for an incredibly low amount of capital. When you're an entrepreneur and you start paying $29 a month and then you get bigger, you'll pay more, $79 for Shopify. They'll allow you to scale your business to as big as you want to become and grow with you. If you look at this chart, you can see brands like Red Bull, Jones Soda, who we just did an episode on, Procter & Gamble, Fossil, Nestle, New York Times, Budweiser, Universal. These are GE. These are massive companies, and they're all using Shopify's platform. And I think even cooler part about this slide is where they show Lisa, the mattress startup, which started out in their small business segment, but has since risen because it's grown, probably because Shopify helped them be an awesome company. Lisa's not leaving them because they need more. They're just paying more for functionality of Shopify as they need it and they grow. Love this business model of helping companies move up the chain. This is their investor deck, by the way. I'm going to put a link in the description so you can check it out yourself. This is their biggest moat. When you're thinking as a customer, what website do I want to use? Do I want to use Wix? Do I want to use Weebly? A big part of that decision goes to, okay, is this company going to be around a while because a lot of these guys are new? How many third parties do they have that are building apps that are increasing the functionality so I can always have a stream of new tools that are constantly improving? And they're building it stronger and stronger by the day, which is there's all these partner integrations. You have accounting with Intuit, customer service with Zendesk, marketing with MailChimp. They have over 1,800 different individual apps. Beyond that, the themes that you can choose to grow your website. And as the company keeps growing and keeps expanding, this partner ecosystem will only strengthen. And so part of my bet to choose Shopify as HyperChange's e-commerce platform is that it's a bet that Shopify as an ecosystem is going to get much stronger. They were voted as the 2017 best place to work for Glassdoor. The company has stressed a ton of times that they're really big on investing in talent and creating a workplace culture where they can hire the top engineering talent and the top people in the world to help them build this platform. If you're investing for this company for the long term, that is huge. The company at the end of the day is just people. A culture like this is really hard to replicate. It's a huge competitive advantage for Shopify. And personally, as a customer, I love the culture with Shopify. Every time I talk to a sales rep, it's a really positive experience. This is an X factor and edge that not a lot of people are going to think about with the company. Now let's get into the numbers. These guys have grown at an absurd rate. They were doing just $23 million in revenue in 2012. 2016, they did $389 million. This chart shows their monthly recurring revenue. So people that have subscriptions that are paying almost $24 million in monthly recurring revenue as of Q2 2017. If we annualize that, that's about $284 million per year of a revenue run rate of people paying subscriptions. Like my $30 a month that I pay to Shopify to keep my website open, that's part of their monthly recurring revenue. So that's a super sticky business model, software as a service. This is exactly what Wall Street loves. And as we'll see later, this is why the company's trading at such a crazy valuation. This is showing their GMV growth, which is an interesting thing, not too important. I think it's gross merchandise volume, which basically says like the amount of dollars spent on the platform. In 2016, they processed $15.4 billion worth of transactions, up 99%. These are just massive numbers, only going to increase. It's not just their revenue that's growing, their gross profit is growing as well. So in theory, their earnings power is growing consistently. They claim that they have more operating leverage, and they're showing operating leverage in the business. Although if you look at their Q2 2016 versus Q2 2017 comparison, it looks like the operating leverage is actually kind of being washed out. And now I want to pull up my own financial charts to show you guys. Shopify is actually losing a little bit more and more money each year. On a cash basis, they're not actually losing money because a lot of these expenses are stock-based compensation, but I'm including those here. And as you can see, the operating income has been consistently negative. They lost $37 million last year despite doing $389 million in revenue. The flip side of that is look at the growth here. 112%, 109%, 95%, 90% nonstop growth machine. But I'm still iffy about this profitability thing. If you look at what they're doing in the first half of this year versus the first half of last year, sure, revenue's expanded dramatically, up about 75%, but operating loss is also down significantly from negative 18 million to negative 30 million. I've extrapolated their revenue to 2017 and their losses so you can see what I'm thinking they're going to do. This is just a rough estimate, and it looks about 670 million. That's assuming about 72% growth for the year, which is a slowdown from 90% last year. Then if I expect revenue to slow down to about 64% growth in 2018, we're looking at about 1.1 billion in sales. Estimated they're going to slightly improve their operating leverage, only lose 75 million. If we get to really what's driving this revenue, here I did a chart with the revenue breakdown. What's in the gray there is subscription revenue. So these are the, that $30 a month that I'm paying to them, that's a recurring fee, that's all subscription. That's growing nicely, but merchant services, which is the blue part of the chart here, is actually been growing much faster than subscription revenue and overtook it as a bigger piece of Shopify's sales in 2016. What is merchant revenue? A big part of it is payment processing fees. So when you make a purchase to buy a t-shirt on our Shopify website, they take like 2 to 3% of that transaction. Also, another tiny piece of this merchant service revenue, which they only launched for US customers in 2016, is called Shopify Capital. Huge potential. Essentially, it's them leveraging their data to offer cash advances to Shopify customers. And based on my research, it looks like they're taking a 10% cut here. The example they use on their website is they have a company that's making clothing and t-shirts. They needed capital to be able to build all these out and build up inventory and fill out their factory. So Shopify, instead of going to a bank, instead of raising VC money, Shopify used the data to say, wow, these guys are a really good store. We'll allow them the opportunity to offer them a loan sort of through Shopify Capital. So they give you the money to build out all that equipment, to build out the inventory. And then instead of paying Shopify back, they just take a chunk out of your sales each day until that loan is repaid. It's not too different from what Square's doing with Square Capital and lending to small businesses. This is a huge underserved part of the economy. Who's running this thing? Tobias Lutke. He is about 37 years old. He's from Koblenz, Germany. He started the company in 2004. He's a coder as well, expertise on Ruby on Rails. He's young, he's passionate, one of these visionary leaders that can really disrupt an industry for the long term. It's just a testament to see how amazing the product is, to see how incredible the revenue growth is, to see them getting things like best places to work by Glassdoor. These are all things that are a really good sign about the CEO, and he's only 37 years old. This guy could be running this business for another 20 years and really take it to the... Finally, let's get to the valuation here, guys. Okay, Shopify is absurd. The stock has been skyrocketing. Everything I'm telling you that everybody knows, it's an amazing product, amazing business. They're growing insane amounts. So of course the market is valuing them at such a high premium. They have a market capitalization of $12 billion. Now remember, this is a company that if I extrapolate their financials out till 2018, they're not going to be making money. Even with my pretty aggressive growth assumptions, I'd argue, they're going to do $670 million in revenue in 2017, $1.1 billion in 2018. So if we do the price sales ratio on that based on a $12 billion market cap, this company is trading at about 18 times my projected 2017 sales, and then they're trading about 11 times my 2018 sales projection. These are really, really expensive multiples, but the growth is also really impressive. So you're paying for a really high quality business that's growing incredibly quickly. Where's my skepticism here? They're not actually making money if you take into account stock-based compensation. I would watch this operating leverage very closely, because if you're paying such a high price sales multiple, you're expecting eventually this business is going to start producing a ton of cash. We haven't really seen that net of dilution yet. I kind of want to see an inflection point where we start to see a lot of structural cash flow that's non-dilutive from Shopify before I'm really convinced in the bull thesis. But that's kind of me being picky. Also, the company has no debt. They have $1 billion in cash. They've only had a history of doing very tiny tuck-in acquisitions. Their biggest previously disclosed acquisition was $15 million before this. Be on the lookout for a big, exciting acquisition from Shopify. The last thing I want to note is they have a partnership with Amazon, but in the long term, there's undeniably their biggest threat is Amazon. They're catering to people like HyperChange who don't want to sell on Amazon. We want to do our own thing, have a niche brand, own our kind of platform with our own website. That's a niche that's growing really rapidly right now. It's not too hard to see Amazon creating some sort of service that's very similar to Shopify. You know they're looking at this closely, and although they have a partnership now, the biggest risk for Shopify is not Wix, it's not Weebly, it's someone like Amazon coming in and saying, we're going to allow entrepreneurs to do everything that Shopify does, but also integrate with our main platform. We haven't seen that yet, but that would be the biggest risk. That sums it up. Go to check out our new website, www.hyperchangetv.com. Cop some merch if you want to. That is my opinion on Shopify. They're an incredible business, but you're paying for it. But I think if you believe in the vision, the addressable market opportunity here is massive. And in the long term, this could be a much bigger company, but it's still pricey. Anyway, that's HyperChange. I'll see you guys next time.